right. Welcome to Your Time, Your Money, the show where your time is just as valuable as your money. And we know that. We are excited for our guest session today. Anthony Catalfamo, the legend, the myth, joins us today on this episode of Your Time, Your Money. Today we're going to be talking about really a great topic, and that's one where we haven't covered before. And I think actually this one needs probably 2 or 3 segments. We were talking prior about some of all the different nuances that property and casualty covers. Property and casualty insurance.
That's a big umbrella.
Yeah, you hear it as P&C insurance, but property and casualty insurance covers so many different avenues of our life, of the things that we own. Mm-hmm. And I think to do it justice, we need to have 2, possibly 3 segments.
Oh, yeah, definitely.
So today we've agreed to really focus on home and auto, which are, when you think property and casualty, that's kind of the 2 that you really think of off the top of your head.
Those are the most popular.
Most popular, right? So we'll get into, we talked about specialty lines, we talked about business lines, things along that lines, all which are needed in the world today. But let's focus on the 2 that most listeners would have, and that's home and auto. Because if you don't have a home, you usually at least have an auto.
Right.
And if you don't have a home or an auto, you're probably homeless. So, and which is not a good thing either. So, let's get started. Why don't you tell the listeners kind of a little bit about your background, in the industry, and even prior, because I think it's very important to highlight that you work for Dark Horse Insurance Company, mm-hmm. Insurance Services, but it is a veteran-owned business because you are a veteran.
Yes.
So why don't you tell our listeners a little bit about that and your background?
When I was 17, I started out in the 82nd Airborne, and then went over to Special Operations where I did psychological warfare. I did multiple tours in Iraq. And again, I'm going to give you the quick abridged version. And got out, became a city fireman for the city of Schenectady and a paramedic. And I started noticing we'd be going to all these fires. People wouldn't have renter's insurance. People wouldn't have homeowners insurance.
Lost everything.
They'd be, and then the Red Cross is coming for you. And I was like, oh, great, the Red Cross. No, the Red Cross puts you in the flea bag, drug-ridden hotel that's right down the street if you are in a lower income neighborhood.
Yeah, because you don't have...
Or if you go or if you're in a bigger income neighborhood, they're only going to put you in the cheapest hotel they can find. And then, so, I mean, again, it's the Red Cross. Yeah. They're there for an emergency. It's for... Yeah. There's nothing else that's going to help you. There's nothing going to get your clothes back, nothing.
So you experienced it firsthand.
Yeah, so I was seeing it, and of course, I was like, I'm doing this job, I'm helping somebody, but I'm also getting paid to help people, which is a really good feeling and a really good thing. I mean, you get to help people. You guys have helped people with their money. It's a good feeling. You're getting paid, but you're helping people. Yeah. And I was like, how else can I can help a lot of these people, but I was also like, how else can I also make a living doing it? Yeah. And so I got into insurance. I got licensed, started an agency, grew the agency to about $1.5 million, had some health issues, sold it, and then met up with some guys after I sold it, and they were like, hey, we want to start a P&C business, and we need you in on it. Got in on it.
Settled through, got in on it.
And we were all bouncing around names of all kinds of different things, and I forgot who came up with it, but the name Dark Horse popped up, and that was literally the when I did psychological warfare, the knight is the chess piece because we're unconventional in our movements, and the Dark Horse was literally our symbol. And I forgot who said it. I don't know if it was if it was Matt.
And for racing, it's the horse that comes from behind.
Yes, and we're in Saratoga area.
Right?
Yeah,
it's the course that comes
from behind. It's the Dark Horse. Yeah,
Excellent. So so one, bred on a passion, that brought you into it. But when we talk property and casualty, let's start with homeowners, because that's kind of the big one, right, for most people.
Yeah, the homeowners, which also
in order to close on a home.
Yep, you have to have that.
You have to have that.
Most places nowadays, if you need to rent an apartment, you have to have renter's insurance. That's a form of homeowner's insurance.
Okay, all right. And when people are shopping out homeowners insurance, right? A lot of times they're just going to whatever company that they already work with. They're not really shopping it out.
No.
But coverage is pretty broad, meaning most companies out there that are on the market, whether you know their name or don't know their name, they have a set of rules, right? That they have to stay by to insure that home
Correct.
or the property, right? So really, it's shopping two things, I would guess: is shopping cost and then service.
Yes, and then in all fairness, no homeowner's policy is built the same. So we have multiple carriers. They're night and day with what they offer extra. There's always an addition to.
So what are some of the things that you would ask, or that our listeners should be asking themselves about their own policy to look into? Like, does it cover this, or what are the specialties or bells and whistles that an insurance company might have?
The biggest thing is your coverage A, which is the actual house. As of right now, especially with the way inflation went, 99% of people are underinsured right now. Everyone I'm writing right now, they're falling out of their seats when they're like, well, I'm insured for $300,000. Yeah, it's $600,000 now to rebuild your house.
Yeah, because it's a replacement cost.
It's not market value. We don't care what you can sell it for. It's how much is it going to cost to remove everything, because we have to remove everything. Yeah, we can keep the foundation, but now we have to rebuild it. Plus, you have to rebuild it to today's standards. So your 2x4s are not 2x4s; it's 2x6s for a higher R value. You have different code enforcement rules you have to follow. I mean, there's other coverages in that.
I could see where that could lead to a lot of mistakes by people, whether it's thinking their insurance needs to be off their mortgage value, or even thinking it needs to be off of their assessed value versus the actual value.
Right. So insurance's main goal is to make you whole. So if they pay you their limits to you, they've made you whole.
Yeah.
But if your limits are not where they're supposed to be, you're going to be you're going to have a big donut hole.
It's so that your 3,500 square foot house that burns down, you're not in a single wide trailer after, because you didn't have enough money to build that home again.
Exactly.
Wow. Yeah, I could see that being a large problem for any individual that's been in a home for 20 or 30 years and haven't updated their insurances to that.
Right. And then a lot of places you get busy, you don't focus on at least every 2 years doing a reaching out to your customers. Would you like to do an insurance check? Not to shop around, but hey, has anything changed? Did you buy anything? Did you get new jewelry? Did you buy any toys?
Yeah, I had that down as a question for you. Like most people think homeowners insurance just covers the home, but at least when I look through my policy, there's a lot of things that are covered in there up to a certain amount.
Yes.
Like you were saying, jewelry,
guns, money you have in a safe, value, precious metals. If you have gold in a safe, but the safe's not rated for it, it all melts.
Okay.
But you're only valued, depending on the policy, depending on what the price is. I mean, the state, New York State, sets a limit. This is what it has to be. Most carriers will do the limit or more.
Okay.
Because they want to have a value added to
so
their customers.
you really want to sit down with an agent and you want to discuss the internals of your house.
Yes.
So that the agent can then customize around there, right?
Right. I understand everyone's worried, especially with the economy. Yeah. Cost. Yeah. A really well-rounded policy is not going to be as cheap as you think it is.
Yeah.
I mean, but
now correct me if I'm wrong. There are some ways that people can maybe get more coverage in the areas that they need, but then reduce the premium back down a little bit through the deductible, right?
Yes, you can always do that.
So, so for instance, if somebody has, let's say, a baseball card collection, and it's valued at $250,000, you could go in there and write a custom policy that protects for that $250,000.
Yes, we could write that as a collectibles policy separate of your homeowners.
And then somebody might be able to move their deductible from $1,000 to $5,000.
Yes,
which might bring it down, still increase it, but bring it down a little bit or something.
And I always
that.
say with that, I would say whatever you're saving, if it doesn't meet that deductible after 10 years of having that policy, it's not saving you anything.
Yeah, right. Okay. So I think a drill down point for our listeners is you really, really want to have an agent and not just an 800 number and say I need this policy.
You got to remember too, and I don't even talk to these agents when I call the company. I get a seasoned person to handle the agents, because we're going to ask them questions that some 18, 19-year-old who filled out an application at Geico or Travelers, every carrier, all their online stuff is going to be just a young kid who's following a script and following a checklist. Yes, he's licensed.
Okay. But
they're following a script and a checklist. Yep. And they're working directly for the company.
So what are maybe some of the big things that a listener should look in their policy, if they have their physical policy, which I think most people do, but they don't know where it is.
They don't know it. Well, the beauty is everything's online now, so you can download it and put it on your phone.
Okay. And what are maybe the big one, two, or three things that they should immediately look at to say, wow, I need to talk to somebody about this?
I would divide the rebuild value, which would be your coverage A,
Okay.
by your square footage and figure out what they did per square foot, how much
Okay.
they gave you. Did they give you $100 per square foot? 150? 170 is right now the standard.
Okay.
I like to bump it up to 180, 190
Okay.
because we don't know where inflation is going. We don't know,
Yeah.
we have a lot of uncertainty right now, and my whole job is based off of uncertainty. So why not be a little bit more liberal with the rebuild cost?
Okay.
I mean, we're not talking that much of an increase. We're talking maybe $50 a year if I up it 50 grand.
Right. And then the benefit being not a captive agent, being a broker.
Well,
for all instances,
a lot of people,
right?
a lot of people call us brokers, but we're independent agents is what we're called because.
But you can shop the market.
I can shop the market. I have multiple carriers. I don't work. A captive agent only works for, so like an Allstate agent only works for Allstate. A farmer's agent only works for farmers.
Okay.
Geico can only write Geico products.
Yeah.
And they have to follow what Geico says or they lose whatever they built.
Sure. So
whereas I don't have to. I get to tell the carriers I don't like that.
So how much does it play into, you hear a lot about bundling, or you hear a lot about multi-policy discounts and stuff like that as we transition maybe into the auto conversation a little bit. How much does that play into like developing a plan for a client?
That really depends on the client's, in all fairness, insurance credit score. It's a different score.
Okay.
Everyone has an insurance score. That plays out a lot of things. It's as of last time I checked, it was a 1,000 checklist that the computers now do internally.
Now, is that looking at prior claims and stuff?
It's everything.
Okay.
It's also, it's a huge algorithm that the actuators create that it takes into your age, your location, the type of car, the color of the car.
Points on your license.
Points on your license. Your biggest thing, your liability. There's so many people that have state minimums.
Okay.
And it's like, you could have the greatest credit in the world. You have state minimums, you're automatically considered a non-standard driver. So you're going to get the worst price.
Oh, wow.
Because you don't want to protect.
Wow.
You don't want to protect your liability. And the biggest thing you got to think about is when you get in the car, you're taking your house, you're taking your assets, you're taking your 401k, you're taking everything with you when you drive in your car or your boat or your motorcycle, and you hit somebody.
Yeah, as a liability.
And they sue you. All of those things are available for that lawyer to just shred.
Yeah. So, so obviously you want to see if it's makes sense to combine those, right, with a specific company. But if
sometimes it's not, sometimes financially it's not. I mean, yes, you might be looking at $100 discount here, but if I rate your home with this company, who's a local, small New York company, still is going to insure you.
Yeah.
And they're half the price.
Yeah, so the discount may be worse for you if you're picking two different carriers and specializing it around those carriers.
Right. The key is at least you have your insurance all under the same agency.
Yeah.
So you only have to call one guy.
Yeah, all the more reason to go with an independent agent who can shop the market for you. Now, here's a weird thing. Like, right, as we transition into auto, there's so many different conversations we can have about that. We could be here for like 16 hours.
Same thing with home. I mean, I could spend a whole day on it.
If you have minor children on your policy, if you have everything like that. But let's delve into just the basics of auto coverage, right? We had a segment with Paul Harding from Harding & Mazzotti, well-known attorney in the area. And he said, the thing that's missed a lot is I think it's sum coverage.
Yes, that's the
supplemental.
Yes, which in New York State, and I don't know why I keep seeing this on some policies, the New York State insurance law changed way back when I first got into this, like 14, 15 years ago, saying that if you make your liability, say I made your liability 250, 500, 250,000, 500,000 max, your sum has to match that in New York State, or you have to sign a piece of paper saying I reject it.
Okay.
So when I see people who have it, I go, did you sign the paper that said they didn't even realize they signed it? They probably got a DocuSign and just went to town.
Yeah. Because he says
because they're trying to save
$50. Yeah, it's the most common thing missed on there. But
it's not that big of a savings on a policy, but
for the liability.
But again, we're insurance. It's a very saturated market and a very saturated commodity. Every 5 feet, there's an insurance agent of somewhere.
Yeah.
So how some of these guys are going to distinguish themselves is write the same policy. You're not going to see that they deducted. And the scary part about that is that's for you.
Yeah.
The sum is for you.
Yeah.
The liability is for whoever you hit.
Yeah.
But the sum is if you hit them and they don't have enough liability, your sum will cover it.
Yeah. So that's a huge miss if that's not appropriate on there.
It stands for supplemental uninsured motorist.
Yeah.
So you go to Florida, where the state minimums are 5 and 10.
Yep.
And then a lot of people don't even have insurance. Where you go to Texas, where there's a lot of people, or New Mexico, any of those southern states that are along the border, where you're going to 99% chance if someone hits you, they don't have insurance and they're driving off.
Well, we just recently had a friend about maybe 5 or 6 months ago that got in an accident over in Rensselaer, and the driver that hit them from behind was in a vehicle and wasn't insured. I don't know whether they were legal or not. But I think the only saving grace for that family was that he was in a pickup and he had just filled the bed of the pickup with dirt. And it like buffered some of the impact.
Yeah.
But I know his wife's back was hurt and all sorts of other things happened to them. So you really never know who that's going to be.
That falls into different coverages. There's a new coverage that's been around for a while, but it's becoming more it's New York State, so it's so weird. We have now called statutory spousal insurance. So that way, if you're in that car and your wife or you get hurt and you're in the passenger seat and you're not the driver, the bodily injuries for the driver.
Sure. Yeah.
Not the bodily injury, I'm sorry, the PIP, the personal injury protection, is mainly for the driver. It follows the driver. There's only so much of it. So when you run out of it, your medical bills don't get paid. Well, having that supplemental spousal insurance allows the wife to sue the liability section of you, your whole family.
Yeah.
Technically sue. You just file the paperwork.
So what are the main or large things that a listener should take away from auto insurance? Like what are the normal coverages or the coverages that they should be looking for having and making sure on there? I know, just throwing on a caveat in that question is, last week I was down renting a car, and they asked me, do you want the car rental insurance? And I said, well, is it the car rental insurance or is it the collision waiver insurance? Because they sell a separate policy down there for that in Florida. But like, do all policies cover that stuff? Or?
Not all policies cover rental car.
Okay.
Some policies don't.
Yeah, and a lot of people don't know, but they just say it because they don't want the insurance.
Well, because they see that it says rental car. Yeah. And like, oh, I have rental car coverage. No, that provides you with a rental car.
If you miss your thing.
Traditionally, your liability, whatever you're in, will follow you, but your comp and collision does not, unless it states it in the policy. I know when I used to write, MetLife got bought by Farmers when I used to write their Grand Protect. It was worldwide car rental coverage. So anywhere in the world that you rented a car, you had comp and collision.
Okay.
So you didn't have to buy their insurance.
Sure. And same thing with homeowners, right? The collision or the comp deductibles are adjustable.
Yes.
If you need to get somebody into a policy and they have maybe an affordability issue or something, you can work with them on that. But also more importantly is making sure that not only the deductible, but that the coverage is the right amount, right?
The biggest problem we have that is we have young kids that are coming off their parents' policy, or they don't have parents and they're just entering the world and they're kind of on their own. They get what they can get, which is usually 25, 50, 10, which is the state minimum. I start slowly bumping them up. The first thing I bump up is their property damage. I don't know any car that's $10,000. I mean, most cars are between 50 and 80 now.
Well, yeah,
new
cars are crazy.
You hit a pickup truck, you're at 100,000.
Yeah.
So even now, I used to max everyone out at 100. Now I'm looking at writing people at 250 for their property damage because of how expensive these cars are. You hit a full size SUV, you're talking $110,000, $106,000 to replace it.
And then another thing for listeners, right, is as we age and so I have a 1994 Ford Thunderbird, right? Not a stellar car by all means, but for me, it's a memorable car. I've worked it. It's a nice car. But it turned 30 years this year, right?
Right. So after 20, you could have insured it.
So that's a line, right? A separate line that listeners should look at for cars after 20 years.
And it's not going to be your State Farm. It's not going to be your traditional coverage, even though State Farm says they have it. Whenever I go to an event and they put me next to the State Farm tent, I love being next to it because they get done talking and then I go, come on over here. They're like, what? I go, that's a great policy. They're like, yeah, except for if you only have a partial damage. And I go, ask them, Are they going to replace the parts? Are they going to give you a specialist to help you shop for the correct parts? Or are they just going to give you the Chinese fake parts that you can get on Rock Auto?
Yeah, because you don't,
You want the
especially if
original
a
parts. You want to go onto eBay and be able to just buy even if it's a used part, you want to be able to go to eBay and replace your 1994.
Yeah, OEM.
Yes,
right?
you want the original because it ruins the value if you just go with Rock Auto.
Yeah, and for those
not to Rock Auto is a
car
wonderful
buffs or
company. I love
listeners
Rock
out there,
Auto.
you'll understand OEM versus
Yes.
generic.
It also comes down to towing. You need
Yeah.
to get it towed because it gives you roadside assistance. Well, you're either going to get, Earl and Earl's towing.
Yeah.
And they're going to wrap metal chains around your crap. And
Nader, the best backwards driver.
and screw up your $15,000 paint job, or you're going to get a nice flatbed every time because that's what's required by the classic car insurance companies. You can't tow for them unless you use soft restraints, and you have to have a flatbed. Nothing can be back towed.
Yeah, and that could be even high end luxury cars.
Anything, yes.
Ones that specifically.
Yes, we have
supercars.
I mean, again, too, for all my supercar people, if you're buying a McLaren, good luck insuring it.
Yeah.
It's very hard to insure, especially if you haven't taken any driving courses. If you decide to get a supercar, I would say go take 3 or 4 racing courses before you do.
Yeah, and I think that's a win about Anthony for the listeners is that he is a car buff. So,
yeah, I love cars.
So he does know the nuances behind cars, but also the better insurances to support those cars that you have.
Also, I know how to help large car collectors.
And it seems like sometimes I see the common miss for auto is the full glass coverage. I know for people that have like Broncos or Jeeps or things along that lines. I know when I switched my insurance, originally the coverage dropped off and the agent never told me.
Mm-hmm.
And it wasn't until I questioned it when I bought a Bronco.
They might have probably
with a flat front, which I knew was going to get a chip at some point.
Yep.
And it did, but I had added the glass on prior.
Yep.
Thank goodness.
And you got to also make sure some of them are putting in a deductible now.
Oh, really?
Yeah.
Well, yeah, because there's electronics in it, right?
That's the problem. Like my truck that I have for towing the camper, that thing has a heads-up display in it. It has all these sensors in it. It's like a $1,300 or $1,500 windshield now instead of $250.
Yeah, right.
So it all has to be calibrated with special computers.
Yeah, you can't do it necessarily right in the
right. I didn't want all that stuff. It came with it. Yeah. I didn't have a choice.
That's what you told your wife, right? It came with it.
It came with it. Yeah, it came with it. Oh no, I'd never had a vehicle with a heads-up display. So when I saw it, I was like, "Oh my god, this is so cool!"
So, any other major takeaways on the car end or the homeowner's
a couple
end?
things? Just everyone talks about full coverage. What they're talking about is I have comp and collision.
Okay.
One, you can never be fully covered in insurance, at least as an insurance agent. And the things I'm looking out for on you, and I try to say it in a much more eloquent way than I'm going to say it right here, but for time's sake, we can't tiptoe through the daisies. Insurance agents just don't care about your Honda Civic. Nobody cares about your Honda Civic. I'm worried about you losing 30% of your wages for the next 45 years because they've been garnished because you lost a lawsuit and you didn't have enough insurance. You didn't have enough liability. That's what I'm looking out for.
Yeah, it's a major issue if you're underinsured, not insured, not properly insured.
And I'm sure Mr. Mazzotti would agree with me on that.
He made a career off of it, right?
Yes, he does a wonderful job with it, but I'm 99% sure he would say the same thing.
And then now one of the other episodes that we're gonna bring in this segment at some point is. For businesses, because when you have a fleet of vehicles, right, it's different.
Oh, it's way different. Very different.
Liability-wise, because you have different drivers.
And under insurance for that's all different insurances. That's commercial auto, completely different world. And you have general liability. Yeah, there's so many. Just under commercial itself, there's about 400 different insurances.
Yeah, and that's why we like Dark Horses because they have all those different lines. So it's not just personal, home, and auto. There's also business. There's also specialty, and specialty is going to be another episode at some time as well.
That's your toys,
covering all your toys. All those things that you bring home, and the wife's like, what did you just buy, right? But then they have fun with it.
But it was a good deal.
Yeah, but it was a good deal, right? Meaning the salesman sold me,
Yep.
at the event. So any other things before we head out with our listeners on home and auto that are maybe takeaways that you want listeners to take away?
Just remember that these things, as much as we complain about them, and as much as some states require you to have them, they do protect you. And when you do have it, yes, your chances of having a house fire completely destroy your house are not as high anymore.
Sure.
As they used to be, because we're not using fireplaces for primary heat.
Yeah.
But these things happen.
Yeah.
We have ice storms. Your power goes out. You don't have a backup generator. Your pipes freeze. They burst. All the water bursts throughout your house. Well, we're gutting your entire house. That's a total loss.
Yeah. And people don't think they're going to get in a car accident until an ice storm,
and
when there is no control.
Well, and I think the last statistic I saw was 85% of all car accidents happen within 3 blocks of your house.
Really?
Yes.
Well, shows you that you're usually distracted early on in the drive.
Or that's just you're.
Yeah, exactly. So where can our listeners reach out to you if they want to get a quote, if they want to have an insurance analysis, which I think is the most important part, is to have a full analysis of all their insurance. What's the best way to contact you?
There's several different ways. They can go to our website, www.darkhorseis.com. It's still being built, but there's a nice landing page there, so you can get directly to us. You can email us at info at darkhorseis.com. You can also call us directly at 518-290-0386.
Okay, great. And I would encourage listeners, if you want to, just get a good understanding of your policy and your coverage that you have. You let them do an analysis of it. It couldn't
doesn't
hurt,
cost you any money.
Right? Yeah. What's the worst is that they do an analysis and they say, hey, it's great. You're good. I would maybe tweak one little thing and then you're set. Or they say, hey, did you know this is not covered? And you thought it was covered.
Right.
And all of a sudden, hey, now my family's protected. And I know I can go to bed at night and sleep comfortable knowing that, hey, these things are covered.
On top of that, too, I'm not going to sell you on it. If you're getting a better deal with where you're at, I'm going to tell you to stay where you're at for now.
Yeah.
I'm looking for long-term clients. I'm not looking to have a new client every policy switch over.
Sure.
I want long-term clients. I want clients that are going to trust me. So if we're not going to be the right fit for you right now, I'm going to tell you. That way, later on, when you do become the right fit, you already know you can trust us.
Yeah, so reach out to Anthony and his team over at Dark Horse. You can always find the Iron Tree Financial Group at 43 British American Boulevard in Latham, New York, 12110. You can reach us on the telly at 844-444-YTYM, and all our episodes on Spotify and YouTube Music as well. If you have questions, please reach out to us. If you'd like to have some show ideas and other topics you'd like us to cover as well, feel free to send those over as well. And as always, it's your time and your money. All right, guys, thank you for tuning in to another episode of Your Time, Your Money. We really appreciate it. If you enjoyed today's episode, please feel free to share this with friends, family, coworkers, anyone else that you think might be interested. If you do have questions or topics, you can always email them to irontreefinancial@ceterais.com. Please follow us on LinkedIn, Facebook, Spotify, Google Play, and many other sources that were available. And you can reach us at 844-444-YTYM. And as always, it's your time and your money. Cetera Investors is the marketing name of Cetera Investment Services. Securities and insurance products are offered through Cetera Investment Services, LLC, member FINRA, SIPC. Advisory services are offered through Cetera Investment Advisors, LLC. Cetera is under separate ownership from any other named entity. The views and opinions expressed in this episode are not necessarily the views and opinions of Cetera Investment Services. Any recommendations mentioned in this episode are meant for educational purposes only and should not be construed as advice or personal recommendations. Always consult your financial advisor, tax advisor, and attorney for details related to your specific risks, goals, and objectives. Investments have risk and can lose value. They are not FDIC insured. The situations presented are hypothetical to illustrate key topics and should not be construed as actual client situations or experiences. The Esley Group and Iron Tree Financial operate under under Cetera Investors and is responsible for the production of this show. The views and opinions are solely that of the Esley Group and Iron Tree Financial. You should always obtain a prospectus when available prior to investing to know your risk, costs, and fees associated with the investment. Neither the Esley Group or Iron Tree Financial nor Cetera Investment Services offer legal or tax advice or services. You should consult your attorney for all legal-related strategies and planning before you invest. Any legal, tax, or advice from our guest hosts are not necessarily the opinion of Cetera Investment Services, the Esley Group, or Iron Tree Financial. All guest hosts are independent from the Esley Group, Iron Tree Financial, and Cetera Investors. The views expressed on this show are not necessarily the views and opinions of Cetera Investment Services and should not be construed as legal, tax, or other advice.